Moving on with our mini educational series of how to treat or how to use the Fibonacci retracement tool when you trade binary options, or when you try to identify proper places to buy call options or to buy put options. And on the previous recording we were looking at the place to use the retracement level if you're looking at an Elliott wave possible impulsive move, so the 50% and 61.8 retracement, and then of course the 61.8 retracement in the way when you are treating zigzags, and of course the last situation refers to trading or finding proper areas to trade the binary options if you identify triangles. Why? Because whenever you are looking at a contracting triangle, there is a strong tendency that the leg of a contracting triangle to retrace more than 70% when compared with the previous leg. Now, mandatory is to retrace 50%, but when you trade binary options, you're not keen on making as many pips as possible or for price to make a specific move, but you are looking most likely to that at the expiration date your option to expire in the money, and that is the most important thing. I'm talking about even 1 pip if price goes and expires in the money, and the option expires in the money at the expiration date, then your option would be profitable. In our case here, this is the Euro US dollar, and from my point of view we have a classical contracting triangle that goes probably around these lines, and we already know that based on the previous, this one here, the previous move here, this is being called an elongated flat. Now elongated flats appear only in contracting triangles. What does it mean, an elongated flat? It means that you have an A, B and a C, and the C wave here is more than 161.8 when compared with the previous wave A. Now the triangle that we are looking for started from here with this high, something like that, and basically from this moment of time we are looking for legs of a contracting triangle, and then should be labeled A, B, C, D. So from this very moment we are looking that this is a triangle. So by the time wave A is completed here, then we know what we have to do. Well, we have to buy call options, but we do buy call option using the Fibonacci retracement, in the sense that you should not pick, or it is not expected that you should pick exactly the top or the bottom, or a specific top or a specific bottom, but keep in mind that legs of a contracting triangles have the tendency to retrace more than 61.8, more than 70. So if this is 61.8, then 70 will be around this level, and therefore all this area here is a nice area to buy call options. Keep that in mind. Keep in mind that this is a 4-hour chart, so all these candles here represent a 4-hour time frame, and therefore there are a lot of possibilities to properly choose the expiration date. So this is an area to still buy call options, because the leg of a contracting triangle, meaning the B wave to come to the upside, is not retracing more than 50% or more than 61.8. Usually in most of the cases goes even more. So this is a nice place again to buy call options. And then the B wave comes and price breaks to the downside. What do you do next? Well, we are looking for, by the time this small triangle of a lower degree breaks to the downside, which is a bearish sign, all the time try to keep in mind or to look for bearish signs that should come at the end of waves, and therefore this would be nice places to buy put options. What would be the nice expiration date? Well, the expiration date, because this is a 4-hour chart, most likely when you treat a contracting triangle on such a big time frame, then this should go for end of day expiration date, or even end of week expiration date, most likely, depending on the day and the time frame prices the contracting triangle is formed. Now we're looking for a C wave to the downside. All this area all this area here, providing the previous lows in wave A are holding. So all this area here represents a nice place to buy call options. Why to buy call options? Because in a leg of a triangle, this is already traced based on the previous one more than 70%. So I would like to take a chance and to buy call options here with expiration date end of week probably, or stuff like that. So every time you properly identify a contract in triangle, or you identify triangular activity, then look for buying call options for the 70% retracement to come, and when that one comes, look for buy. So this is no area to buy call options. This is all area to buy put options. And if you have a reversal pattern like it is this one here, buying put options until 70 comes. Now 7 is around here. From this moment on, I'm not buying put options anymore. I'm interested into buying call options from here, from here, from here. Thank you very much for being here. With this, we are ending the Fibonacci retracement mini educational series, and we're moving on with Binary Options Academy, probably looking at flags, at continuation patterns as next. So make sure you stay tuned here with us on fairBinaryOptions.com.